Good morning, I'm Ed Oliver. This is the Data Explorer Securities Lending Daily Briefing for the 14th of October 2008. And what a difference a day makes. The world looks a much rosier place this morning. Markets yesterday, record gains in some markets yesterday. The US up 11%. It had its best day since the rebound following the 1929 crash. In Europe, good progress for markets as well. The French and German indices up 11%, the FTSE up 8%, and in Asia, the Hong Kong market up 10% as well yesterday. Where did that come from? Well, news of government intervention across the world, taking stakes in banks and generally stepping up guarantees for savers as well, was all positively recognised, and the markets reacted as a result. Specific company news that was taken positively was the announcement of the Mitsubishi UFG Group purchase of a 21% stake in Morgan Stanley. So again, that pushed up the share price of Morgan Stanley yesterday. Overnight, the progress in capital markets worldwide has continued. Japan, who had a holiday yesterday, are up 14% overnight. Hong Kong also up again, up 4%. And Australia announced a raft of stimulus packages overnight as well. They're up 3%. In Europe today, looking good as well. The UK, French and German leading indices all up around 4% first thing this morning. So it's all looking very positive. The momentum is key, so can we keep the capital markets progressing forward as we hope? Some of the expectations today are around President Bush's likely announcement that he's going to authorise spending of around $250 billion to take stakes in 9 US banks. We expect to see an announcement on that when the US opens a little bit later on. Also good news is that LIBOR is falling, certainly at the short end, which suggests that banks are starting to lend to one another once again. So good news around, and hopefully that will provide the momentum to continue the upward pressure on the markets. In the securities lending world, worth mentioning the Data Explorer's Securities Lending Index. This is a weighted average index of the quantity of stock that is lent and the stock inventory that's available to borrow. It's interesting to look back. The end of the US short selling restrictions occurred on Wednesday evening, and wasn't much change in the index on Thursday. It's broadly flat to where it's been over the last 4 weeks. So that's something we'll keep an eye on here during the daily briefings as we go through the next couple of days to see how stock lending activity changed once the restriction was lifted in the US last week. It's worth mentioning as well the Spitalfields Advisors website. We've got a new paper published today that you'll find on the homepage of the website, assessing the impact of recent events on beneficial owners who are participating in securities lending programs. We comment specifically on counterparty risk, how has the Lehman Brothers situation played out for beneficial owners. We also talk about the value of indemnification. How will exclusives play a part in securities lending going forward, given some of their issues around concentration of counterparty risk? We also talk about collateral practices over recent weeks. How has collateral changed, and how have beneficial owners' approach to collateralization changed? The impact of short selling restrictions, what does that mean for the future supply and demand in this business? And we assess what the future of the securities lending industry is likely to look like. It's obviously still fairly early days, but at this point in time we'll take a quick look at that. So more details if you're interested at www.spitalfieldsadvisors.com. So that's about it for today. The first shoots of recovery perhaps, or maybe it's another false dawn. We'll have more tomorrow morning on the Securities Lending Daily Briefing at dataexplorers.com. Have a good day.